Hi everyone. This is a special session for the updates for 45th GST Council Meeting. And there are some important changes in the GST law. There are some clarifications related to rate. And in this particular webinar, we will be going to cover all of those important updates related to the uh, things which are being taken up by the council in its meet, and on which some of the decisions have been taken. Okay. So there were a lot of things in the kitty of the government to improve upon and to discuss and to finally make an outcome out of that. But then some of them were left in the middle, and I mean that is very say like foreseeable because states have their own issues, center has their own issues. And the first issue was about the petroleum products. So when GST was introduced in India, the petroleum products, they were supposed to be the part of GST, but see there's a battle of taxes, there's a battle of revenue between the state and the center, and like both of them are earning a very huge amount of revenue through the taxes on petroleum products. And like we all are making a hue and cry now and again, and we say that okay, I mean the petroleum is getting dear day by day. It's almost 100 in Haryana. In Delhi, it may be a little more higher. But the thing is this, that the alcoholic liquor and petroleum, these are the two biggest sources of revenue for the government. And the alcoholic liquor was already out of the scope of GST, and for the petroleum product, they were not being able to make a consensus between the states, and even the center doesn't want it to be bring it to the levy of GST, because then its taxation will not be that much controlled by the center or the state. First thing, second thing is there is a matter of reliability between the state and the center. So generally, states are not believing on the center. Their compensation is already pending with the government, and you may have seen that the chief ministers and the finance ministers of so many states, they were just urging the central government to give their revenue, their part of revenue, but the central government is not paying it. So there are so many issues in the GST. So first issue was about the petroleum product, and I think in a recent time we cannot even expect that petroleum will ever be bringing into the GST, because states will not leave their revenue and center will of course not leave their revenue. And the second most important part is the trust factor between the state and center. States doesn't want center to collect the tax on their behalf because they feel that it will not be going to pay it, and even if they make the payment of that tax to the state, the biggest problem will be that there is a kind of favoritism. So for some of the states where the same kind of party is ruling, the center may be giving the revenue easily to the states, but where there is an opposition, so that amount withheld by the center for the state, it can be used as a tool for the state to curb them, to control them. So if you want the revenue from the center, you will have to just say yes to our conditions. So that may be a thing. So apart from that, this is something which is the most public related item in the all of the items which are being taken up by the GST Council in its meeting. But then there are some items which are directly related to the taxpayers, that is the people who have the levy of GST and who are not the final tax bearers. So the first item was something related to the tax bearers, and the second and the other items I will be discussing in this webinar will be the items which are not directly connecting to the tax bearers but the mediators, that is the people who are under the levy of GST. So GST law is being like 4-year-old law, and it has so many changes. It has seen many amendments and many changes till now. So one of the most complicated area of GST was the Gst R4. Every person who is sending some goods to the job worker for the work, so the industry which will be directly connected to these kind of activities will be the pharmaceutical industry, manufacturing industry, the entire FMCG sector, I will say the handloom industry, the people who are making the fabrics, the clothes, different kind of clothing, they send their clothes for the embroidery, cutting, stitching, those kind of things. So most of the manufacture sector is more or less using the services of some kind of job workers for their services. So all of those people were required to file a return to the government, which was called ITC 04. And ITC 04, earlier it was monthly, then it was quarterly, and now it's being half yearly, because many taxpayers were like facing a lot of issues in the filing of this return. So now ITC 04 is half yearly if the turnover is more than 5 crore rupees. If the turnover is less than 5 crore rupees, then it will be annual. So I will say that it is a kind of huge relief for all of the manufacturers who were filing the ITC 04, because its format was very, very complex. The form was not properly working on the GSTN portal. The form was changed in the rules, in the formats of the form, through the rules, through the notification, but on the GSTN portal it was not amended properly and it was not working. So in the earlier form, you were required to map one to one, outgo and incoming of the goods. So if in one truck you have sent, say, this much of fabric of shirt, this much of needles, this much of thread, this much of buttons, this much of the other things, maybe the zippers, then you will have to connect the return item with that particular item through which it was sent. So it was almost impossible for any industry. I had personal discussion with the heads of many industries, like pharmaceutical sector, like the uh, say the export houses who just export the clothes and all. So the common view of all of those were that there are many items which just get destroyed, or many items which are like subsidiary items, like needles. You cannot ever estimate that how many needles will be required for the clothes, or some like there is no one-to-one connection or one-to-one correlation into the between the different things. So later on the form was changed, and that one-to-one correlation was it was removed from the form, but still it was very, very cumbersome. So it's a good news for the people who are sending any kind of goods for the job work. So in that particular case, you are not required to file ITC 04 very frequently, and you can now file it annually if your turnover is up to 5 crore rupees, and half yearly if your turnover is more than 5 crore rupees. Okay, so the next important thing is very, very, very important, and I will say very, 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 very important. The next very important thing is interest on input tax credit. Is like one of the most controversial area in the GST. So there is section 50, there is a notification, they said the rate is like 24%, but then the correlation between the two sections was missing since the beginning, and most of the experts of GST believe that there is no interest on input tax credit. Then there was another question. I mean, generally there is a different perception of the people who are paying the tax and the people who are collecting the tax. So the department's perception was that any kind of input tax credit, even if it is availed, then it is liable for the interest, right? Even if it is availed. And there was a judgment of Patna High Court which said that no, if you haven't utilized the input tax credit. So for example, let me take an example. Okay, I thought that my input tax credit is say 20 lakh rupees. So I availed the input tax credit of 20 lakh rupees, but I didn't utilize that. So I didn't utilize it. There may be different reasons. The first reason may be I availed my input tax credit because I don't want it to get time barred under section 16(4). So maybe it's a disputed credit. So I just avail it so that it will not be time barred under section 16(4). But I'm not utilizing it because I'm not very sure whether it's an admissible input tax credit or not. So there are so many type of credits in this regard, like the credit of RCM. The RCM which was supposed to be paid before the 16(4) time limit, or the RCM which I'm paying later on, but I just took that input tax credit because there is a diversion of view on the RCM input tax credit. So many people say that it is a revenue neutral thing. So being revenue neutral, you can just avail it or utilize it whenever you take it, whenever you made the payment of it. But the other people believes that no, the 16(4) time limit will hit it. So let me tell you the exact situation. In 2017, 18, 19, most of the taxpayers, I will say most of the, because I have seen so many frequent cases of this type. So most of the taxpayers, they forgot, or say they don't understand, or say they were not being able to analyze the provisions of GST, but somehow they just skip the payment of reverse charge in their books. Right now, when they come to know that they have those kind of responsibilities, they came to know when they started filing their annual return. So if I'm, and you already understand that for the first 2 years, the last date of annual return was extending, and we were just filing the annual return of 17, 18 in 19, 20 almost, right? So 16(4) time limit already hit at that time. Okay, so now the thing is that most of the taxpayers, when as a consultant I will told them like you need to pay a reverse charge tax of say 10 lakh rupees, they will say okay, maybe I will pay if it's my responsibility. But the important thing is whether I will get the input tax credit of it. And if I will say no, they will be like, why I will pay it, right? So although again I will say there were divergent views, and some of the taxpayers, some of the experts were of opinion that it's a revenue neutral thing. So you just made the payment of tax and you were just taking the input tax credit of that tax. So there is no loss of revenue to the government. But again, I will say these kind of concepts work only in litigation. When you will go to the department and you are just discussing it with an officer and at the notice level, I don't think they will understand the revenue neutral type of very, hyper theoretical things. So a judge of a high court or supreme court may be understanding that, but an officer in the department may not be understanding that. So most of the time we have to deal with the officers and not with the judges, because each one of us is not going to just file a case and have that litigation, because we don't have that much of money and efforts. And the most important thing is hope. We just don't even have the hope. That because the recent judgments of even Supreme Court in case of inverted rated, you can understand that we should be kinds of a little less hopeful for the litigative items, and please just stop looking onto those litigative items and saying, oh, it's ultra virus, I will not be going to follow it. Please don't do that. If you can follow it in the compliance, just please follow it. If there is some beneficial decision, you can just fight with the government later on. So like, don't take all the mortars on your back that okay, I will fight the government because it's an ultra virus provision. So if it's ultra virus, please follow it if you can follow it. So the most important thing which is being clarified by the council in this regard is that on input tax credit, if it is availed and it was inadmissible, so inadmissible input tax credit availed, the interest rate will be 18% and interest will be applicable only if it is utilized also. So if the input tax credit taken but it was never being utilized, you are not liable to make the payment of interest. This was the position which was being upheld in the earlier, the case laws in the earlier taxation regime also, right? So it was very clear to the expert that okay, this should be the ideal position in this particular regard. But yes, of course, the government and the department, they were like sending the notices and they were levying the interest in various invalidated ITC cases also. So all of the people who have just availed, and in many of the cases, I also suggested them that if you think something is litigative and if you think that in future you may get some favorable decision, just in the case of RCM, just take that input tax credit, avail it, but don't utilize it. So if you're just availing it, you will not be barred out by the 16 force condition. Second thing, you have not utilized it, so you will not be liable for any interest amount. So this is being upheld by the council also. I'm just reading the text, what they have written, because what is written in the recommendation is different. I would suggest all of you to please follow the proper notifications also. Only the notification will be going to give impact or a change in the law, and recommendation is just a recommendation. Sometimes when we translate a recommendation into a legal framework, sometimes its definition, its thought process, it gets changed, right? So I'm just reading the text for all of you. In the spirit of earlier council decision, interest to be charged only in respect of net cash liability under section 53 of CGST Act to be amended retrospectively. So the most beautiful thing of this change is it is being changed retrospectively, so something for the benefit of the taxpayer, or I will say against taxpayer, because till now we were not paying any interest on input tax credits, wrong availment or utilization. Now this line may embark a lot, thousands of cases. How it will happen? Let me tell you. In many cases, say as a clerical error, I entered a wrong amount of input tax credit and I entered a wrong amount of outward supply also. So on the outward supply, when I was making the payment of tax, what I did, I utilized that input tax credit wrong amount. So if say for an example, my input tax credit was of 100 rupees and my output tax liability was of 1000 rupees. Say, okay, 110. Okay, it was 100, that was 110, 10 was my net liability. Now what happened, by some mistake the data was misplaced or it was exchanged with some other clients. That is a simple normal situation that happens in many of the CA firms. But sometimes you have so many returns to file, you are not sharing your work with your other professional colleagues, so you have thousands of returns to file, and you just give it to your staff that okay, there are 500 returns, you need to file it tonight only. So, and like for the entire day you were just waiting the GST portal to work, and then you had the entire night to file the return. Okay, what happened? You just get the paper of some other client and you filled it in some other client. So 100 instead of 100 and 110, what you filed 500 and 520, or say 500 and 510. Now what will happen? Outward tax liability increased by 400 rupees, input tax credit was also increased by 400 rupees, and net tax liability was completely okay. It was fine. But now after this provision, they are saying if the input tax credit was availed and it was utilized also, then you are liable to interest. So now you may be held liable for the interest on 400 rupees amount, which was just a clerical mistake from your side. And if you never ever rectified it, so that's why I said that this provision is happy on the face, but yes, it may embark at thousands of openings of the cases, of the thousands of the notices to the taxpayers, and it can definitely be troublesome for so many of the taxpayers. So now the ineligible ITC availed and utilized, the interest rate will be 18%, and that interest rate of 18% will be from 1st of July 2017. So now the opening of the cases from 1st of July 2017, it's not yet 4 years. So under the fraudulent cases 74 section, they may still open your case, and for 73 also. I mean, it should not be time lapse because it was from the date of annual return, and annual return days were extended so many times, right? So this is a risky and gray area. So as a consultant, you should just look into the books of all of your clients and just try to look at it. Try to find out if they have actually availed some excess amount of the input tax credit and they have actually utilized it. If they utilize it, you just need to suggest them the proper remedy for it. And I hope they are already on time bar. Okay. The next important update is the unutilized balance in CGST and IGST cash ledger may be allowed to be transferred between the distinct persons. So what we are talking about is distinct persons. Distinct person. Who are the distinct persons in the GST? Why I should be telling everything? Who are the distinct persons in GST? Because I believe that most of the people who are watching this webinar, they are already experts in GST. Who is a distinct person for the purpose of GST? What is the meaning of distinct person? I'm waiting for your answers. Please. So the distinct person means under a single PAN, if there are multiple registrations, and in GST, that is the normal, I will say the way of how it works. How it works, there are multiple registrations for the single PAN. So one PAN can have registration in each and every single state, and every state will be a distinct person. That every registration will be a distinct person to the other registration under the same PAN. So these are the distinct persons under the GST. So now what they are saying? They are saying that if there is a balance in cash ledger, there is a balance in cash ledger. Remember, I'm not talking about credit ledger. What I'm talking about is just cash ledger. So don't think that okay, the credit ledger's balance can be shifted to the other taxpayers. No, still they are distinct persons. Their businesses are different, right? The unutilized balance in the CGST and IGST cash ledger may be allowed to be transferred between the distinct person having the same PAN but registered under a different state without going through the refund process. Now, best and most important thing is without going through the refund procedure, so you can directly transfer it to a distinct person. And all of us understand, is it easy to get refund from the department? I would really like all of you to share your experience in the department while going for the appeal, while going for a return. It's very important to government to know how much problem the taxpayer is facing. Okay, next. Now they saying that they will issue some circulars to remove the ambiguity from some of the items, some of the complicated areas of the GST, some of the controversial areas of the GST. So first of all, the clarification on the scope of intermediary services. So again, I will question all of you. What is intermediary services? Why I should be telling everything? What is an intermediary service? Okay, for the earlier question, I had some answers. At that time, I was not being able to look at that. Okay. Intermediary services. What is an intermediary service? Intermediary service covered by the IGST Act, and it means that when you are not providing your independent service, but you are intermediating between the services of two people. So in an intermediary service, first of all, there should be at least three parties, right? There should be a transaction between the two parties, a transaction of sale, purchase, or availing of services or selling of services, right? Between the two parties, and the third party is just intermediating in that particular transaction. So for every intermediary transaction, there will be two transactions. The first transaction will be between the intermediary and supplier or buyer, for whomsoever is working, and then there is one transaction between the intermediary, that is purchaser and seller. So there will always be two transactions. Second thing is, my consideration is dependent on the occurring of that transaction. So for let us say I asked you to give me the purchase orders, and you just went to some people and you showed my product. Let us say I'm located outside India. You went to some people, you showed my product, you said that okay, this is the mobile phone, and okay, say there's a mobile phone charger, and they will say these are the wireless chargers for the mobile phone. They are not available in India, so you can just buy from this company these mobile phone chargers, which are wireless chargers, and I mean they can be a very hot sale for the India. So the company get the order of say 1 lakh pieces of wireless mobile chargers, and they said that okay, for the sale of every single piece, I will get a commission of 2 rupees. Alright, so in this case, I'm not doing any independent services, but I'm just mediating in that particular transaction. So mediating doesn't mean the just generating the sales lead or interfering in the sales. It may also cover the converting of exchange between the two people, or somehow facilitating those two people to make that transaction in some other manner also. So what happened actually, the intermediary provisions were also there in the service tax era, and in service tax era, they were just introduced. Actually, it's an international provision, to be quite honest. And this same kind of provision, the same kind of set of the intermediary provision it exists in the law, the indirect taxes law of so many countries. It's not like India invented something. It is actually already present in so many countries. So what happened that in the GST era, they are just increasing the scope of intermediary. Like everything between the two parties was just included in intermediary. Now the question is, what is the problem with intermediary? Let us say if yes, my transaction is an intermediary transaction, what's the problem, man? What is the problem? The problem is the IGST Act. It's section for place of supply. The place of supply section says when there is an intermediary transaction between the two parties, right? The place of supply will be the location of supplier. Now what's the problem? The problem is the place of supply will be the location of supplier. Now I am the supplier, I am located in India, and place of supply is also dragged into India at the my location. Now it will not fall under the definition of export of services. Reason being, for the export of services, the location of supplier should be in India, the location of recipient should be outside India, and the place of supply should also be outside India. So because of that reason, every person who is falling under the intermediary services, they just lose all of the benefits of export, and they have to make the payment of tax on their transaction. So ultimately, they end up in losing 18% out of their sale proceed, because a person who is sitting outside India is not going to make you the payment of tax. You cannot legally charge tax from that person raising an invoice. Alright. So what else you can do, if there is a sales of say 100 rupees, and if I will ask just my foreign party to okay, pay me 118 rupees because 18 rupees is the tax, they will say okay, as per the international treaties, we are not liable to make any payment to you. Also, they are importing the services into their countries. So as per their country's provisions, when we import services in India, what we need to pay? We need to pay tax in reverse charge. Right, so they will also be liable to make the payment on those import of services in the reverse charge as per their country's provision, because most of the countries the provisions are same, tax provisions are same, right? So he will say that okay, I will also pay on the import, and I will also pay tax to you, and I will not be going to get any benefit of that tax. So they will definitely don't pay. What will happen? If my turnover is say 100 rupees, so it will always be compressed down by the 18 rupees, right? So if I'm making of 1 lakh, it will be like less 18 rupees, so it will be like 82,000 rupees, right? So in each and every case, I will end up in losing my 18%. So it's like it directly hit on their margin by 18%. So if some of the transaction my margin is like 20% or it's like 25%, so you almost lost your entire margin, and you may even turn into a losses because of other expenses also. When I say margin, It doesn't include all of the expenses incurred in running the business and the other associated costs. So that's the reason intermediary provisions are under the lenses, and so many taxpayers make some huge hue and cry when they. I have seen some articles from the Big Fours also. They also said that okay, this intermediary means you cannot involve everything into the intermediary. And recently we had a judgment of a court, and there were two judges, and there was a very sweet argument between both of them. Like there was very long and huge argument between those two judges, and one of them said that intermediary provision in itself is a ultra virus provision, because just making a change in the provision, you cannot drag everything into the taxation ambit, because actually the transaction is of export, but you introduced a provision and you finally converted everything into the domestic. You converted and export into domestic, and you just sent it into a taxation liability. So because of that, there was a lot of hue and cry from the public for the intermediary provisions. Many companies were suffering from it, right? So now they are going to clarify the situation related to the intermediary, which is very much required. Next, if you have read the definition of the export of services, you will see that the export of goods is very simple. So what is export of goods? It's just taking the goods from a place in India to a place outside India. It's very simple. It's very cute, right? But export of services. Can anyone tell me what is the definition of export of services for GST? Okay, not an issue. So export of services has five underlying conditions. In those five conditions, the condition is the location of supplier, the location of recipient, the place of supply, receipt of consideration in foreign convertible exchange, right? And the fifth condition is they should not be the establishment of same person. So now it was not defined what is the meaning of establishment of same person. So for the purpose of India, domestically, it's very easy to understand the establishment of same person. So if I am having a PAN number, I have an establishment in Delhi, I have an establishment in Haryana, I have in Chandigarh, I have in say Kerala. So what will happen? These are the establishments of same person, right? But for a foreign country, because when we are talking about exports, it is a transaction between the two people sitting in the different countries. So what is the meaning of establishment? It was confusing. It was like no one was being able to understand what does it actually means. But in some of the advanced ruling, in some of the judgments and the department, they started saying that okay, if there is another company like a parent company and there is a holding and subsidiary company, then it will be taken as a the establishments of same person. Although in foreign country, it is also very difficult to have the holding subsidiary relationship. So that is being clarified that if there is a company under the Indian Companies Law, and if there is any other body under the laws of any other country, so they cannot be called as the establishments of the same person. So I'm also reading the text of this provision for you. A person incorporated under the Indian Companies Act and a person incorporated under the laws of any other country are to be treated as separate legal entities and would not be barred by the condition number 5th of the section 6 of section 226, the definition section of IGST Act, for considering a supply of services as export of services. Okay, next clarification. I hope this should be clear to everyone. In case you have any confusion, any questions, although very few people will be having the question related to it because it is specifically related to the export of services. The other one is also related to the export of services, right? But still, if you have any question, you can just text it in the chat. I will pick it up from there. Okay, next. So next clarification is related to the debit note, the issuance of debit note. So the relevant date for the debit note and for the purpose of section 16.4. Now I'm asking so many questions, but I will also ask what is section 16.4 and what was the relevance of date of issuance of a debit note for section 16.4. Okay, so it is about the time barredness. So earlier there was a confusion that okay, for the purpose of debit note, whether we should see the date of debit note for section 16 for time barredness, or we should have a look, or we should consider the date of actual invoice against which the debit note was issued. So now they clarified the date of debit note is the relevant for section 16 for time barredness and not the underlying. So not the original invoice against which or for the continuance in continuance of which the debit note was issued, but it will be the date of actually debit note only. So if say you raised an invoice on say 20th of February, okay, and then you issued a debit note related to that particular invoice in say 1st of April. So the relevant date will be 1st of April. So it will be falling in the next year. So you will get the extended time of 1 year. It will not be considered from the issuance of that actual invoice. It will be the date of debit note. Then you don't need to carry a physical copy of tax invoice where it is being issued under section 48(4), that is through the invoicing. And the restriction of 54(3) is only for the goods which are actually exported to, subject to export duty at the time on which the export duty has to be paid at the time of export. So if it later on covered under the export duty, then the restriction will not be applicable. Next, now the provisions for section 77 and 19(1) of IGST Act. Again, a question to all of you: what is section 77 of CGST Act? What is covered under section 77? What is section 77? Section 77 belongs to the wrong payment of tax. That is wrongly paid tax. Now, what is wrongly paid tax? It doesn't mean some other kind of wrong payment. It just contains only one type of wrong payment. When you paid CGST, SGST in place of IGST or vice versa. So there is a word in law which we call vice versa. What's the meaning of vice versa? It means the reverse situation of it. So if you made the payment of CGST, SGST in place of IGST or IGST in place of CGST, SGST, what will happen? It was very confusing actually. What will happen in that particular case? Because the government say that okay, you made the payment of tax, but that was a wrong tax. So section 77 says that in that case, what you will do, you will take the refund of the tax which is wrongly paid, and then you will make the payment of tax which is required to be paid. That is a correctly paid tax. Okay. Now a question will arise that okay, today I am making the payment of IGST which was supposed to be paid 2 years back. So whether I will be liable to make the payment of interest? Answer is no. So you may think that okay, there will be interest also, but the answer is no, because the section 77 specifically says that no, in this particular case you are not required to make the payment of interest because you actually paid the tax. Your taxes, your revenue was with the government. The only thing was it was under the wrong head, right? So for this particular section also there was some confusion, right? Okay. Now there is one important thing is there was no time limit for this particular provision. So as per my understanding, section 77 doesn't have any time limit. But now they are saying the provision to be incorporated in CGST rules for removing ambiguity regarding the procedure and time limit for filing refund of tax wrongfully paid. So as per my opinion, there is no time limit for it, and I think they also want to retaliate on the same fact because some of the officers may be just saying it to the people that okay, the taxpayers that no, now it's time bar. So maybe they just want to clarify that particular thing that there is no time limit to apply for its refund. So the time limit of 2 years, the general time limit of 2 years, which is giving under the GST Act, will not be applicable for filing the refund of section 77. Let us wait for the notification because they haven't clarified it in the press council. They just said that they will clarify it through the rules. So we will have to wait up to the issuance of notification related to rules. So there is no notification till yet. Next, then there are some small measures related to compliances in GST. So government's complete focus is on compliance, compliance, and compliance. And this one thing I have told you many times that future belongs to the taxpayers who are tax compliant. If you are not tax compliant, you will not be able to continue in your business. You will not be able to thrive into your business. You will not be able to run your business very successfully because if you don't do the compliance, your return may get blocked. You will not be able to pass on the input tax credit to your buyers, and they will not be able to, they will never be, liking to buy from you if they cannot get the input tax credit, because it's like 18% of their entire cost. They don't want to lose 18%, right? Next thing is, if you're not compliant, your registration number can be cancelled, and cancellation has its own consequences. Once your number is cancelled, you may still be liable to make the payment of tax to the government, but you will end up losing all the benefits you get under the law. So you will see what kind of benefits I take. You get input tax credits. Once your registration is cancelled, you are not eligible for the input tax credit, but still you are liable to make the payment of tax if you are actually crossing the threshold limit, and if the supply is made by you are falling under the liability under the GST. Right. So for that matter, it's very, very important to do the compliances. Otherwise, also there is one more consequence. Your e-bill can be blocked if you are not filing the return. So I will just comment, they just want only one thing from you, and that thing is to file your return correctly on the date, within the due date, and map everything correctly. And that is the only thing government wants from you. So just to make it more firm, so you will see in last 1 year the government has taken many steps to ensure that returns are being filed on time, they are filed correctly, there are no frauds, because the biggest problem at this point of time under GST is the falling revenue. Earlier the revenue was falling too much, and government is not being able to make the compensation to the states which they were eligible as per the GST provisions. And the biggest reason for falling revenue is the fraud of input tax credit. So biggest type of frauds under GST is input tax credit. So how they do it? They just raises the bill, they just pass on the credit, and then they don't pay to the government. So this is the simplest form of doing a fraud, that you raised an invoice, right? You pass on the credit, maybe you filed your GST R1, and through your GST R1 you just passed on the credit to the buyer. So buyer will see in their 2A or 2B, and they will say that okay, it's appearing in the 2A or 2B, so okay, I'm eligible to take the input tax credit. They will take input tax credit, they will make the payment of tax to the supplier, but the supplier is not making payment of tax under GSTR 3. So what will happen? So earlier the government has suffered a lot, because there are so many taxpayers. What they did, they were just filing GSTR1, 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 passing on the credit to the buyers, and then vanished. They never paid the tax to the account of government. Now when the government will go to the recipient and will ask them, okay, just reverse your credit, it was fake, the recipient will say, sir, it was appearing in my 2A, 2B. Like, you were the person who put this condition that it should be appearing in 2A, 2B, and it was appearing in 2A, 2B. So only after that I was being able to claim the input tax credit. So I fulfilled all of the condition, I received the goods or services, I made the payment to the supplier, it was appearing in my 2A, 2B, I have a proper invoicing, so I am eligible for the input tax credit. So government was very tired of fighting with the recipients then, and they were making a hue and cry, and there were some of the cases where the government lost in the legal battle, that now you cannot recover it from the recipient because they fulfilled all of the conditions. So they changed the law also, they inserted 86A so that they can block the input tax credit. But under 86A also you can just block the input tax credit ledger or input tax credit amount for 1 year. So ultimately you are not going to make any collection. So you can just bother them, you can just torture them, but you will not be finally getting to get any benefit out of it. So ultimately that provision didn't help to the government. So again they are here to just increase their parameters to strengthen the return filing, the correct return filing, and the cross linking of payment of tax with the claiming of input tax credit. So some of the measures they are announced. The Aadhaar authentication of registration to be made mandatory for being eligible for filing refund claim and application for revocation of cancellation of registration. So Aadhaar authentication. So they understand that if you will open the GST portal, they have an option of Aadhaar authentication. So what we all do, we just skip that option and we start doing our general business on the portal. The government says that okay, now we cannot force you because you already understand that Aadhaar pen linking has been pending from long, and government is unable to take any strict action because most of the time the court says that no, you cannot do it, right? So here also they have just indirectly tried to force the people to link their Aadhaar on the GSTN portal with a particular registration, because they want to trace an individual. That is also very important. In most of the frauds, the biggest problem is they are not being able to trace the individuals. So now they want to link it to an individual. So if my Aadhaar is there, I am an individual person, I will be like directly held for something. They have someone to torture. They have someone so that they can just pull a human being and then ask that, okay, if they make the payment of tax, they can just check their transactions. They can just force them. They can just take the statements. They can try to take the proof. Everything for the financial fraud. So that is the only reason for doing that. So now on Aadhaar authentication with the registration of the registration is mandatory if you want to cancel or if you want to file the refund application or even the revocation of cancellation. Then there was a long pendency of GST R1 late fees. Let me tell you everyone that GST R1 late fees was always being there in the law since the inception of GST, because it was not levied by the portal. Many people are asking me in the various seminars where I was being deliberating over the GST. The people were asking me, GST R1 late fees लगेगा क्या? And I was like, sir, it should be there. लगना चाहिए. नहीं लग रहा है portal पे, that's a different issue. So people were like, whether there is a late fees on GST R1. And I was like, it's not live on the portal, or the portal is not forcing you to pay it, but that doesn't mean you are not liable to pay it. So GST R1 late fee is there in the law since the inception of GST, alright. Just like GST R3B, there is a late fee for GST R1 also. Only thing was that the portal made by Infi was not being able to do it automatically, but now they will do it automatically. So see, the focus of government is not on providing the other features or the smooth functioning of portal. Their only focus is like how to capture the revenue. So Infi is not doing, they're not just posting a new GST R3 reform. They are not improving over the returns, but what they are doing, they are doing the auto population of late fees. So now you will not be able to file 3B of next period unless you make the payment of GST R3B. So the late fees of GST R1. So if there is a delayed GST R1, its late fee will be auto populated in the next open return of GST R3B. So when you will be filing the GST R3B, it will be added to the challan, and of course you cannot file GST R3B without payment of that full amount of challan. So now on, GST R1 is also required to be filed on time, because in that case also you will be liable to make the payment of late fees. I have seen that many consultants and many taxpayers, they take just GST R1 very lethargically and they say that okay, it's GST R1, we can be late on it, right? But now actually you cannot be late on GST R1 also, because in that case you will be liable for the late fees. Next, then the rule 59.6 of the CGST rules. Now what was that? So it was about the filing of GST R1. They are saying that from 1st January 2022, so you have the time of 3 months, change your habits, make it better. Okay, so from 1st of January 2022, they provided that a registered person shall not be allowed to furnish GST R1 if he has not furnished the return in GST R3 for preceding month. So earlier there was a gap. Now it is so much prevalent that if you are not filing GST R3 of last month, you will not be able to file the GST R3B. Sorry, if you are not filing the GST R3B of the preceding month, you will not be able to file the GST R1 of next month, because GST R1 is just a statement of sale. But the thing is, the department connected GST R1 with the eligibility to take input tax credit. Now the worst thing is that GST R1 is just a statement of sale, but actually it is more powerful than GST R3B. Why it is more powerful? Just filing the GST R1 and I can pass on the input tax credit of crores of rupees, right? And then if I'm not filing GST R3B, what's happening? On the behalf of government, I distributed the credit of crores of rupees and then I didn't make the payment of the same amount to the government. So when the government will come to me, I will be vanished, I will not be found nowhere. And when government will go to the buyer will say, I have already made the payment of this particular person. Alright. So for that particular matter, they just want to control their risk. Still, if you are going to make a harm to the government, you will be able to make harm only one GST R1. After that, they will just block your GST R1 if you are not filing GST R3B. I will say apart from that, they should also, this is one suggestion I am giving from day one, when they came up with those new return of GST structure. Even at that time, that was my suggestion to the GSTN team and to the entire department, that don't do it. So they scrapped the new return formats. That's very good, and there's a one best step taken by the CBIC and the Infosys for that matter. There is one suggestion that when they are filing GSTR 3B, open their GSTR1 and auto-populate the liability from GSTR1. And if I will try to fill a lesser amount, ask me to remove the particular invoice which I want to remove. And as soon as I will remove that particular amount, the input tax credit in 2A will get blocked for that particular person. Right? So that should be the another thing, that when I am filing GSTR 3B, so just don't make a condition of filing of GSTR 3B. Because in that case, I may also file it with a lesser amount. Right? There is no such restriction at this point of time. So what you do, when I am filing GSTR 3B with a lesser amount of tax what I have declared in GSTR1, open GSTR1 invoices and ask me to remove the invoice. So don't reduce the amount, without any information, just reduce it as per the invoice label. So I will remove the invoice, so the department will understand, okay, this particular person's return is not eligible for the input tax credit, or their invoices were not being able to the input tax credit, or amend that amount, or edit that amount, if like not removing the entire amount. So what will happen? First thing is, at the time of filing of GSTR 3B, most of the errors in GSTR1 will get rectified. At the input tax credit at the buyer's end will also get rectified. Right. So this single thing can save tons of time and efforts, and of course the revenue of the department. Next, Rule 36.4 is to be amended. So Rule 36.4 is one of the most notorious rules under the GST. What it says, they are saying that Rule 36.4 is to be amended once the proposed clause of section 16.2 AA is notified. Now again, one more question. What is section 16.2 AA? What is section 16.2 AA? That's a question for everyone. So 16.2 AA is like newly introduced, and it's newly introduced. It says that, okay, in this particular matter, unless your supplier enters your invoices, so it is, I'm just telling it in a more generalized language. So unless and until your supplier is covered in his invoice, he made the payment of tax on it, and it is communicated to you. And how it is communicated? It is communicated to through 2A and 2B. So it should be like properly entered in his return. You are not eligible for the input tax credit. Although 36.4 had this almost same language, not the exactly same, but almost the same language. And 36.4 was giving you a slab, a gap, a margin of 5%. So now even that margin will be removed once the Section 16.2 AA will be introduced. It will be notified. It's already introduced through the Finance Act 2021, but now it is supposed to be notified very soon. So they are saying to restrict availment of ITC in respect of invoices or debit note to the extent the details of such invoices or debit note are furnished by the supplier in form GSTR1 or IFF are communicated to the registered person. Alright, in form GSTR 2B. So unless and until they are being covered and they are being communicated to the taxpayer, so communicated through GSTR 2B. So communication here doesn't mean that you will have to specifically call him and tell, okay, this invoice is being inserted, or send a proper email. There is a way of communication which is being defined by the GST portal itself. So the portal will itself communicate. You just need to file it correctly. So if I am filing something in my IFF or GST correctly, so it will be properly communicated to my buyer. Right, so only that communication is required. There is no such other form or format of the communication. So here the communication means that particular communication only. Now the next thing is that once the section 16.2 AA is introduced, Rule 36.4 will be amended accordingly. So the 5% margin which was available till now will not be available. So when it was introduced with the 20% margin, even at that time I had the same view, and in many of the seminars I already covered that this margin is only for the time being, and after a period of time they will remove all of the margins and you will be able to claim only what is being disclosed by your supplier. So the same thing is happening, and again the purpose of everything is to just avoid the frauds. So these were the important changes which were introduced by the council, and let's just wait for the notification. You may be having some questions. But I will definitely say let us wait for the notification, because we will be going to have more clarity after the notifications. Then there are some changes in the rate. Okay, there was an exemption for the exporters of the ocean freight, that is the vessel or air freight in case of export transportation. Right, so this was actually every year they extend the time limit in every September. So this September also they increased it, and now it is being exempted up to 30th of September 2022. Right, what is exempted? Transportation through sea or through air travel, right? For the case of exports. Then there are some, small trading. Okay, there is one more important thing, not related to the rates, but yes, the inverted rated duty structure. So this is also one of the most controversial area, and BKC Footwear's case we have already seen, which is being said it's toppled by the Supreme Court, and they just reversed the judgment, and they said no, you are not being eligible for the service tax input tax credit. Okay, so refund is not available in that case. So there are some of the important industries like footwear and the textile sector. So they are saying that okay, we will not be going to change the provisions related to refund. What we will change, we will just abolish the inverted rated structure. So instead of changing the provisions, so much of litigation from the side of taxpayer, and they are also saying that the revenue is being lost by the states, so they want to increase the amount of revenue for the states. So they are saying that inverted rated structure refund, the refund provision will not be abolished from the law, but they are saying that wherever the structure is existing, they will just remove that structure, and how they will do it I don't know, but the only way I can see is either you will have to increase the amount of tax on the sale, or you have to decrease the amount and on the purchase, the amount of tax on the purchase. So either way they will do it, but when their focus is on increasing the revenue, the overall revenue of the states, because they are much concerned about the refund which is being claimed by the taxpayer. So when you are concerned about the revenue part, I think the government will be going to increase the tax rate on the output. So wherever there is a tax rate of say 5%, so the textile industry is one of the industry which enjoys a very less rate of tax, because it is being something which is being used by very like every kind of person, like very poor people. They also need fabrics, like we say roti kapda and makan. So makan is very expensive, but yes, for roti and kapda the government has some provision. The food grains are exempted, most of the food grains are exempted, right, unless they are processed and they are packed into the different things. So they are, I mean, if when they take a color of being something for a rich person, they just tax it. But when it is pure and it is at a very nascent stage to be utilized by a poor person only, then it is exempt. So for the food grains, for example, the fabric, the textile industry was at very lower rate, and there was a slab also. So for like footwears, they were also slab based taxation. So for the lower slab of the pricing, they were exempted, or they were taxable at very low level. But now the government said that there is a revenue loss, and then there is a lot of litigation under the inverted rated structure. So they will be just abolishing all of the inverted rated structures. Abolishing, how it will be done? They just appointed a committee. I think there is a committee of officers. Ministers. So there will be an UMA committee of ministers who will just discuss and say that how it will be done. So what I feel that in the future the rate of 5% will be just shifted to a rate of 18%. So that should be the, I mean, the normal outcome. But yes, we will have to wait till January 2022, because that thing will be like whatever the decision will be, it will be applicable from the January 2022 only. Okay. So these were the important changes. There are some rate-based changes also, but I am not covering those changes, because you can just have a look at that list, and they are not relevant to everyone. They are just very. There's a taxpayer specific, very business specific. So you can just have a look on the basically the provisions only. So what I can find only one question from Mr. Nandit Kumar. He's saying GST late fees कब से लगेगा? The good thing is that they are saying it will be auto-populated in the next month's return. They are not talking about the previous late GST R1's late fee, so there may be notices for that also. Remember, the late fee was leviable from the day one under the GST provisions. So there may be the notices, but the auto-population of GST R1's late fees in GST R3B, that will be from January 2022, or if the GST portal will be able to make it earlier, and hopefully if it will not be able to make it by 2022 also. so maybe somehow late. But again, I will say, just because of the fact that it is not being auto-populated in GST or 3B, it doesn't make you don't have liability to pay. So in that case, what will happen? I mean, it's very easy for the department. They just need to run a query and they will be able to see all of the lately filed GST R1s, and they can just send the notices if they want to. So if they are not sending, maybe they are just occupied and busy into something else. They're just focusing on the bigger amounts of revenue and not about the 200 or 50 rupees of the late fees for the matter. So these were the important changes which were recommended. So always remember, whenever there is a meeting of GST Council, there is only and only recommendation. These provisions will be finalized only and only once they are being adopted by the law. And how it will be adopted by the law? It will be adopted by the law through a proper notification. So they will issue the notification, they will tell you the date of application of all of these provisions, the manner in which they will be implemented into the law, because sometimes that happens, there is a communication gap. So what we read from the council's recommendation of what actually getting translated over the GST Act and what actually finally get converted on the GST portal. So there may be a huge communication gap to all of them. So again, we will definitely be discussing all of these provisions once the notifications are issued by the government. So till then, I would like to close this session. I would like to thank ClearTax, and I would like to thank all of you for attending this session. And that's it. Thank you so much, everyone.